why Bitcoin needed to be created. It needed to give us a way to take our fiat, convert it into something that is no longer inflationary, can't be devalued. So crypto is opt-out, right? It's an opt-out mechanism. It allows you to opt out with a portion of your wealth from the fiat fiasco.
In the world of cryptocurrencies, the excitement continues to grow as Mark Yusko, the visionary founder and CEO of Morgan Creek Digital, reinforces his optimistic outlook for the digital asset market. Despite the notion that his predictions of an upcoming crypto bull market may appear premature, Yusko maintains a positive stance, suggesting that an exciting crypto summer is on the horizon, set to commence around mid-June. With Bitcoin's relatively short existence of only 14 years, it has managed to outperform other assets in 11 of those years, as highlighted by Mark Yusko. He emphasizes that Bitcoin's value has surged from nothing to a staggering $500 billion, making any claims of its demise seem unfounded and impractical. A month ago, Bitcoin experienced its latest crash, but has since rallied. In the time since, the market has gained nearly 50% in market value. He suggests that the turmoil witnessed in the banking sector served as a catalyst to pave the way for the widespread acceptance and integration of central bank digital currency. Yusko pointed out that despite the occurrence of 3 of the most significant bank failures in history this year, Bitcoin did not experience a crash as one might have expected. Instead, the cryptocurrency witnessed a significant upward trend. According to Yusko, this observation holds valuable information and suggests that Bitcoin's performance is not solely dependent on traditional banking dynamics. During a comparison between the price charts of Bitcoin and gold, Yusko highlighted an interesting trend. While the value of gold has declined, Bitcoin has experienced a notable upward trajectory.
We have this weird dynamic that the Fed exists to steal the wealth of the masses through this thing called inflation. Inflation is not good for us. So what happened? So all of the graft and corruption of the savings and loan crisis and the first banking crisis in the 90s and the second banking crisis, global financial crisis in 2009. So January 3rd, 2009, Bitcoin is born. Now, why was it born on that day? And why is the first image on the Bitcoin blockchain in the Genesis block a photograph of, or JPEG, of the Financial Times chancellor on the brink of second bailout for banks? Well, that is, again, a commentary, social commentary on why Bitcoin needed to be created. It needed to give us a way to take our fiat, convert it into something that is no longer inflationary, can't be devalued because there's a finite supply, it's scarce. And that deflationary asset allows us to protect ourselves against this fiat fiasco, which means we can create fiat out of thin air. So fast forward to today, what are the implications? Well, the banks reliquefied themselves. Then these other competitors rose up and they were threatening the guys at the top again. So what do? They foment fear and create a reverse bank run. So all the money flows back up to the top banks. Why? Central bank digital currencies. Well, what's a central bank digital currency? Central bank digital currency is not Bitcoin. It's not Ethereum. A central bank digital currency is a closed, centralized ledger that is a surveillance tool and a control tool. So it's all the worst things about fiat money. Inflation oriented, can be devalued by decree, plus programmability and control. Bitcoin has held up, as you said, really well, right? We got the second and third largest bank collapses in history, and Bitcoin's up. Now, if you would have told me 6 months ago that 2 of the largest banks in America are going to fail, what's going to happen to Bitcoin? Everybody would have said, oh, it'll be down 50%. It'll go to zero. Peter Schiff would have been saying, oh, it'll definitely be zero then. Okay, Peter, here's the thing. Over the last 10 years, gold is down. Gold is down,
Yeah.
and Bitcoin's up about 10 years. It's like 850%. So gold is down and Bitcoin's up 850%.
From its peak of $60,000 to its subsequent dip to $27,000 and eventual downturn to $15,000 during the FTX debacle, Bitcoin's trajectory appears to have carved out a distinct inverse head and shoulders at $27,000. This pattern, a classic technical signal of a potential bullish reversal, suggests a large-scale breakout could be imminent. Yusko's unwavering confidence in the cryptocurrency market stems from his extensive experience and proven track record. His conviction is rooted in a profound comprehension of the underlying technology and its transformative potential in reshaping the financial landscape. Yusko emphasized the significance of blockchain technology, which serves as the fundamental backbone of cryptocurrencies. He highlighted that the transformative potential of blockchain extends far beyond Bitcoin, offering numerous applications that can revolutionize various industries.
Do you know the term bucket shop? It exists for a reason, right? The boiler room.
Exactly. Yeah.
Right?
Yeah.
You know, small cap stock scams. Go back
Yeah.
and look at history in the 1920s, in the roaring 20s. And look at all the scammers and all the little companies that had no real business that would go public, and they'd pay off the officials and then they'd just go out of business, and that's what eventually led to the crash. And did we stop investing in stocks because there were a lot of scammers in the 1920s? No. How about in the 1970s when we had the savings and loan crisis, and I guess it was 1980s. And a savings and loan crisis, and we stop investing in stocks? No. Or how about the global financial crisis when the big banks, right, the banks that we trusted, were scamming us with CLOs and CDOs and slicing and dicing, the Big Short? Nope, we didn't stop. Yeah. And yet when people talk about crypto, they're like, oh yeah, you had a bear market last year. Like, yeah, and year to date this year, it's up almost 100%. And it is, again, for the 11th out of 14. It's only been in existence for 14 years. Bitcoin's only been an asset for 14 years. And 11 of those 14 years, it's been the number one performing asset. And over the whole 14 years, number one, by far. No, I mean, it's not close. And it was, it's not a real asset. It's not investable. Like, it's gone from nothing 14 years ago to $500 billion. Okay, that's something. $500 billion is something. You just think about the use cases for, let's take the Bitcoin blockchain, right? There's a whole thing now about, well, people are storing inscriptions, physical items, like the picture of, the Financial Times, on the Bitcoin blockchain. Well, why are they doing that? It's the most secure chain. It's the most valuable chain. And if you have a valuable asset, right, a valuable piece of art, a valuable piece of real estate, valuable whatever it is, you'd want it to be in the safest place possible. And so people are all mad. The Bitcoin maxis are all mad because now the cost of engaging with the chain are rising. Well, you're not supposed to flip, okay, the most valuable asset. It's supposed to be the base layer, the settlement layer, like FedWire. I don't interact with FedWire every day. I use my Visa card, and once a month, I interact with the main chain. I settle up through my bank into Visa and pay the money. I don't pay with money every day. I don't interact with FedWire every day. I don't need to.
Bitcoin has been trading in an uncharacteristically narrow range for months, but history indicates a big move may be on the horizon. The recent failures of several regional banks may have been intentionally triggered to facilitate the smooth adoption of a central bank digital currency. Yusko encouraged individuals to educate themselves about the technology and understand its implications for the future. On this note, we conclude our video. If you found this content valuable, show your support by giving it a thumbs up and subscribing to our channel to stay updated with the latest news and videos. Thank you for joining us.